All right, back. Thank you so much for staying with us, and it's good to have you back. Well, analysts expect Nigeria's GDP to grow to 4.22% in Q4 of 2025, an increase from 3.98% in Q3. This signals a positive outlook for the year as economic growth is projected to accelerate towards year end. This was disclosed in a macro reset note released following the latest GDP data from the National Bureau of Statistics. Reacting to the economic data, the report says the dip in the Q3 2025 GDP had been anticipated, given softer oil output, a consequence of fading supportive base effects. However, a rebound is anticipated in the last quarter of the year, which is expected to be driven by improving macroeconomic conditions. My next guest is Mr. Oluseun Onigbinde, is co-founder, CEO, Budget. Thank you so much, Mr. Onigbinde, and it's really good to see you.
It's a pleasure being here, Tolu. Thank you so much for inviting me.
Yes. Well, I think I should allow you take us through what you make of the GDP figures for Q3 2025, 3.86%. Some say they expected something better than that. But looking at these fundamentals, what do you make of it?
I feel like, it shows the trajectory we had been on in recent times. We were at 3.19% in 2024 in Q2, and then we are now at 3. It is a growth. I mean, and I think when you look at the growth that we are getting on the basis of what the MBS brought out, it's a step forward. Maybe also could be like a little bit of validation of the current impact of the expansionary monetary work by this either the CBN or by the federal government as a whole. Then you also have to figure out that the reforms that the federal government has been making its pointers to, either the reversal of the removal of fuel subsidy, or either you had to look at the exchange rate parity. This might be us, getting the validation to that in some sort of way. One of the things that I take note is how most key sectors that are powering the economy, most of the key sectors grew significantly. And that growth is helpful because, we know that agriculture is around 25% of our GDP. So if agriculture is not growing, if one of your biggest levers is not growing, it just means that growth is not happening per way. So agriculture grew by 3.79%. We had a GDP growth in real terms of 3.98%. So it's just clearly also states that, we are trailing about maybe if we begin to get the levers, the key levers of the economy to do much more better, and then we begin to see GDP growth improve significantly. But so for me, the first thing I think I would really appreciate is that we have agriculture, taking a very strong growth. Also, that also tallies with our food inflation has been, dripping a little bit. Food inflation is around 13%. Don't forget that there was a time where we had food inflation that's maybe above 25%. Obviously, it means also that things are changing from that macro, but it's still not growth that is significant enough. In Nigeria, for us to maybe get the traction that we really, really need, we have to grow in terms of around 6 to 7%. That's what can really, really accelerate. Also, let us forget that the devaluation of the currency has significantly weakened our entire GDP in terms of in the dollar terms. So, but that is what you see. So when you look at the structure of our GDP, crop production is around 23%. Trade is 16%, real estate is 13.36%, telecoms around 7.67%, so, and livestock. So if you are not growing in that direction, in those key sectors I've mentioned, the growth is not happening as it should happen. Another thing that I think we should do far more better is our oil and gas sector. The oil and gas sector, oil production is doing great, but the oil and gas sector has still not grown at the level it should be. So I think if we put it in the proper situated, it's a welcome argument. We have seen improved numbers in terms of growth, but not just at the scale of what it should be.
Let's take a step. I'm worried, the services sector, that used to be a sector that impacted positively on the GDP figures before now, but I think it's slowed down a bit in Q3. That's on one side. Now, considering these figures, what would be your own projection for Q4 with all of the fundamentals you've highlighted?
I mean, a lot of things can change by the time we bring on Q4. We have seen tremendous improvement in the numbers, but like I mentioned, and the few things that can change is that you have elections coming up, and there's a political risk in terms of the fidelity of the government to some of these reforms that I've put forward. The second risk also is how inclusive some of these reforms are. If, for example, we are not growing, if some of those reforms are not transmitting to the economy as it should be, then definitely you begin to have people have a strong pushback, and that might change how the government's fidelity or commitment to these reforms. And so it's how do we insulate some of these changes? Because some of the reforms we're doing is CBN taking a much more conservative monetary policy stance by raising rates, or even they kept the rates as the same recently, or if federal government now still having an expansionary fiscal side, because you see that the budget, the MTF budget is at 54 trillion naira. Obviously, even though it's 54 trillion naira, you would expect that budget would end up becoming 65 trillion naira because of National Assembly adjustments and imputes. There are still some complications around, I think, how the federal government is not disciplined enough in its fiscal direction. We are getting a bit of monetary discipline, but I don't think we have that fiscal discipline that we should have, especially in terms of how do we transmit spending within the economy. But what I will foresee is that we will maybe hit that trajectory. If we have gotten this high in terms of growth, and we'll try to reverse what we used to have, and things begin to look much more up. Now we are at 3.98%. There's no reason why maybe we should not cross the threshold of maybe around 4.5% in the next quarter. Maybe when you look at 2025 as a whole, it could be around maybe 3.7, 3.8%. It's a step forward in terms of growth, but still not bullish enough in terms of the developing economy and in terms of where we should be as a country. And when you look at some of the services that we've had, if you look at the growth is still there in terms of the services. In fact, I would still say that a chunk of the growth that we're having is still within, because agriculture is huge, but our biggest slow point is still manufacturing. If you take manufacturing as an aggregate, we're growing at 1.25, 1.25%. In fact, a significant chunk of that growth is being midwifed by the oil refinery, which is obviously by the Dangote Industries Limited, and maybe one of the changes we are making there. So obviously, we are still, manufacturing is dragging us down significantly. But most of the places where you have growth, the size of the economy, size might not be much. The financial and insurance grew by almost 19%. So which means that there was significant growth in that direction. If you look at information and communication, which is also a critical part of the services, grew at 5.78%. It could do far much more better in those directions. But overall, it's just for us to also know that the critical sectors like manufacturing that can generate more jobs, put much more investment in there. Places like telecoms, information and communication, what are we missing? Considering that we are in an era where AI is also significantly bringing growth in different parts of the continent or the universe. What are we going to do to leverage AI to churn out new leadership and new products and new ideas that also could significantly leapfrog us? So those are the things that we need to do. In terms of looking at GDP, I like to look at the structure of the economy and say, what are we doing right and what are we doing wrong? And that will make us understand where we can generate growth. If livestock, crop production is around 23% of our GDP, that means if the agri sector is still growing at 3.8, 3.9%, it means that we are not going to be able to generate significant growth in the economy. And let's not forget, crop production is the rural economy of Nigeria. So it also means where does the federal government should put more money in the 2026 budget, do more for agriculture, do more for the rural economy, then we can generate the growth that we truly seek.
You touched on something very important, talking about the monetary policy committee retaining rates after many expected that because of the declining inflation, steady currency valuation and all of that. We've seen a bit of talking about the dollar to naira rates and all. And some say even inflation is at 16.05%. So many expected the Apex Bank to actually reduce rates. I spoke to Dr. Adedikpe, and he also re-echoed that he expected the bank to reduce rates. But the bank came up with his own reasons why he had to hold on to rates. Considering the impact of this and what the Apex Bank did, let's put it together. What's your take around all of this?
In my own view, what the Apex Bank did, I also don't agree with it, but I understand it. I think they are taking a very conservative. Well, let's agree. This is a conservative bank, So this is not. I mean, we have moved from the time where we do expansionary development finance, where the CBN was giving money to livestock, we give money to the textile industry, they give money to agriculture, they were doing all form of funds. In fact, it seems like they were, usurping the powers, usurping the powers of the finance ministry. Now we're moving away from that deliberately, and we're moving into CBN focusing on its core mandate in terms of price stability and maybe general employment within the country. Now, I feel like my understanding is that at inflation at 16%, they still see it as double digit. They still understand that obviously we had some we did some adjustment of the inflation basket in recent times. So obviously maybe we need to take a little bit of time to reflect if that has also contributed into how we perceive inflation at this point in time. So I think they just on the side of caution. But also we are in a time where we need to generate more growth. We need to significantly generate more growth. And if we keep the reference interest rate as high, in the 25, in the 24%, it doesn't help, in some sort of way to really generate growth within the economy. So my own feedback to the CBN and co is, I don't like this. I feel like they should have done some easing on that from their side, but I hope that they would take note of this as we go along and make a significant move to just ease the economy. A lot of manufacturers, a lot of industry conglomerates are suffering. They are facing significant challenge on the high interest rates that we have. We see commercial papers 23, 24%, and some of those are not they're not easy LD for businesses. So it also means that the CBN has to move back a little bit in terms of the MPR, and also so that they adjust for the prime lending rate, and also adjust significantly for risk-weighted assets that we have in the market currently. And I guess that's what I understand CBN is cautioned, is applying caution here, but it also means that they also have to pay attention that this environment needs ease of capital, and it also needs growth to be significantly generated.
Interesting stuff. Let me also take you a bit away. We've seen state governments now coming with their budgets, and I know you're always interested in all of those spending plans, and we see large figures. I already see a smile, Shiu. Lagos came up with about 4.2 trillion naira. We've seen states coming up with over 1 trillion naira, states that didn't used to project or get, have spending plans up to that figure. I don't know what you're learning around this, what is happening. It seems like there's so much revenue expected in 2026.
Yeah, I mean, I think a lot of states, they tasted the wonder of 2024. It's significant. Yeah, we just finished our state of state report, so we saw the numbers. Nearly every state got double the amount of what they had in 2023. They had a double in 2024. Obviously, the exchange rate as devaluation was largely responsible for that. We also have to acknowledge that we have had significant improvement in oil production. They're also anticipating that the tax, let's not lie, the current tax reform of the federal government is written to benefit states more. Maybe it might not have distributive effect. Maybe not all states would benefit from that, but most states would benefit from increased earnings based on these new tax reforms that we are going to have. So the states are anticipating that, and everybody's going bullish. I see Ogun State 1.6 trillion naira budget. I see Lagos State, bringing trillions. I see even states like Enugu, trillions of naira budget. I mean, I'm always a big fan of budget credibility, because we have seen states, they shoot in the eye. They more like, we have the largest budget. Having the largest does not mean anything. Also, very important for states to focus on data integrity. We see it in budget, and maybe we would ask questions when it's time about states now manipulating figures, especially IGR figures. It's something that it's not supposed to happen. Let the people know the true state of things, because that would help you to, understand where improvement is supposed to happen. If you have some one-off balance sheets payment, don't make that look like high GR. Because if it's there this year, now, and it gives you a significant jump in your IGR, you don't have that next year. Now it now looks like you are a failure. Maybe you didn't grow the numbers as you should. So those are the things that we played state to be honest with the figures. So that helps everybody to understand how best we can be of help to you. But I feel like states are awash with cash. But there are some few things we should also take note. Number one is that because states have more money does not mean they are paying their workers more. Part of the problem we have why the economic reforms of the government is not being transmitted. In the analysis for budgets, we saw that revenues are doubled. Capital expenditure for most states had even grown by around 80%. Overhead costs has grown around maybe 64%. But personnel costs for most states at aggregate level is around 23% growth, which means even though we had minimum wage move from 33,000 to 70,000, states have not been generous in terms of the personnel cost growth. So there still seems to be a problem in terms of giving more money to the workers, which we know will have significant effect on the state economies. The other part is also the fact that states are now spending on capital expenditure. We hope that states will do more on social sector expenditures, because it seems everybody wants to build a new bridge, everybody wants to build a new road, everybody wants to construct a new conference center, a new airport, a new government house. All of that are still capital expenditure, but they do not have significant impact compared to investing much more in education, in health, and also even putting more money around social protection. One of the biggest problems is that we assume that states should not have a component in the social protection policy of the country, but it should not be so. A lot of this, when we talk about humanitarian thinking, we think, federal government, NEMA, Ministry of Humanitarian Affairs, but no. States also should have a significant chunk of their budget focused on social protection. That's how we get an aggregate impact in terms of the economy. But we are still observing the budget. We'll come out with a report very, very soon to say this is the state of what state governments have proposed. And then we'll now compare that with how much money that they have had in recent times and show who's realistic and who's not realistic in terms of credibility.
Interesting days are really ahead. I must thank you so much, But maybe in 1 minute, if we can do this. For the entire economic outlook, what do you make as we move into 2026?
I mean, optimistic, but cautionary. Optimistic because we have learned some things right. And I hope we continue to learn those things right. That institutions should be institutions, CBN should be an institution. And I think if we stay to those principles, and then we now improve on the fiscal side in terms of efficiency and inclusion, then we'll be able to move things forward. If state government also step up and do more in terms of social protection, and also investing much more in their workers and transmitting some of these resources into the local economy, we're going to get much more impact. If we do more investment in agriculture, trade, real estate, the key levels of the economy that needs to grow for us to have significant growth, things will change. Security is also very important, because all of this will rest on the plank of a much more secure society. So I would say things are meant to get better, but it could be far much more better if some certain actions are being taken by the government.
Mr. Olusegun, I must thank you so much. Always interesting having you join the program. Hopefully, we'll have one more of these charts before the end of the year. I must thank you, co-founder, CEO, Budget Nigeria.
Thank you so much, Tolu. It's a pleasure being here.
All right, then.